Hi guys, welcome back to Father and Son Investing. We're going to do an update on Pfizer today. I did the first video about them back in March when the stock price was hovering right around $33 per share. I followed up with about them in August this year when it was right around $49 a share. Well, today we're up to $55, $54. That is up almost 51% on the year. Pfizer, what is going on with them? Why the sudden increase in the stock price? We're going to talk about that. Now, the last time I talked about Pfizer, I said there's so much going on with this company that it's just way too hard to talk about all of their news in such a short video. And really, that's the same case this time around as well. But let's talk about some of the recent events that are driving up the stock price. First of all, let's talk about today's news. Pfizer announced today that the FDA has approved their drug Xeljanz for the treatment of active ankylosing spondylitis. Now, you may be asking yourself, what is ankylosing spondylitis? Well, ankylosing spondylitis, while you may not have heard of it, is actually fairly common. There are about 350,000 people in the United States who have it, about 1.5 million Europeans, and it's estimated just shy of about 5 million people in Asia have ankylosing spondylitis. What is it? It is an inflammatory condition, predominantly of the spine, where the spine starts to fuse. So if this is what a normal spine looks like up here, this is your vertebra, this is the disc in between each vertebra, these are the nerves that come out at different levels. You can see there's a nice clear space here where it goes spine, disc, spine. Down here, instead, what we see is spine, bone overlying this disc or in that disc space. And eventually, the person's spine can become totally fused. Not only their spine, but also their sacroiliac joints. It's really hard to find a normal picture of a sacroiliac joint on the internet. This is what it would look like on a CT scan. This nice black or gray space in between these two bones here. This is the sacrum, this is the iliac bone. This is what a sacroiliac joint should look like. And instead, the spine and the sacroiliac joint can wind up looking like this, where that nice clear space in between those two bones becomes filled with bone, and the bone develops in between here along the edges of this disc space. You can imagine that all of this fusion of bone would not only make a person really stiff, but this becomes potentially very brittle as well, such that very minor trauma can cause devastating fractures. As you can see here, there's a fracture here for this poor person right through this level of their spine, with potentially devastating consequences as well. Now, Xeljanz is not the only treatment for ankylosing spondylitis, but this one is an oral treatment where the other treatments are generally going to be an injection or an infusion of a medicine. But this can potentially be a game changer for people who have this disease. Now, how can it be a game changer for Pfizer? Well, this page from drugs.com shows that Xeljanz is a little more than $5,000 per month. When you start to multiply that by 1.5 million Europeans, 350,000 Americans, and up to 5 million people in Asia, you can see that Pfizer stands to make a lot of money from this. Now we'll just quickly touch on this announcement. Again, December 14th, Pfizer announces additional phase 2/3 study results confirming robust efficacy of a novel COVID-19 oral antiviral treatment. The pill here, this pill for COVID, this is a treatment for COVID, not something to prevent it, but to treat it when someone has already gotten the disease. How good is this drug? Well, it reduced risk of hospitalization or death by 89% within 3 days of symptom onset, and 88% within 5 days of symptom onset. Now, the size of this trial is not insignificant. There's over 2,200 adults enrolled in its phase 2/3 trial. Now, this drug is not approved yet, but this study is part of the emergency authorization use request to the FDA. All right, let's just hit two other little announcements here just to give you this good idea of what Pfizer is doing. December 13th, so yesterday, Pfizer announced that they are going to acquire Arena Pharmaceuticals. Now, Pfizer has been acquiring multiple companies. This article here details how there are 7 companies that have been acquired by Pfizer. We're looking at companies such as Warner Lambert in 2000. We're looking at Pharmacia in 2003. And the list does go on to as recently as November 2021, when they acquired Trillium Therapeutics. Now, why are they acquiring so many companies? It's all about getting these drugs under their umbrella during the time that they are under patent. It costs a lot of money to research and develop a drug, but if you can acquire another company's drug and bring that into your house, you don't have to do all of that research and development. Now, in this case, Pfizer is going to acquire Arena Pharmaceuticals for their drugs that haven't been FDA approved yet. We're looking at some phase 3 drugs for important bowel diseases here, such as ulcerative colitis and Crohn's disease. All right, you can see that Pfizer just has so much going on. Look at this list just for December of their announcements and what's happening with their products. I want to finish this up with this article discussing Pfizer's valuation. The question is Pfizer still undervalued right now? The author of this article walks us through some of the valuation methods for Pfizer. First, we'll look at the forward earnings multiple. Pfizer's 11.56 at the moment. We'll look at the price to earnings growth, that's 1.12. Let's compare that to the industry, and we'll see that the pharma industry, their price to earnings is about 14.35, and the price to earnings growth is right around 1.5. Now, Pfizer's price to earnings has been as high as 14 and as low as about 10.2, but the median's right around 11.6. If we look at its price to earnings growth, it's been as high as 3.2 and it's as low as 1.1 essentially, with a median right around 1.7. Let's look at Pfizer's price to book ratio. It's 3.9. Now the pharma industry price to book ratio averages about 6.4. For Pfizer, this metric, price to book ratio, has been as high as about 4 and as low as about 2.9, but the median's been about 3.2 over the past year. I want to finish up this valuation and comparison here by just showing you a chart. This comes from Zacks. The blue, kind of purple looking line here is Pfizer, and this sort of reddish orange line here is the rest of the pharma industry. And we can see that Pfizer stock is just killing it when it comes to the rest of the industry. Pfizer's up, at the time of this article, 43%. It's now up over 50% for the year versus the rest of the pharma industry, which is only right around 15%. So the take-home message I get out of this is, one, Pfizer stock is doing really well. Those of us who invested earlier in the year, back when it was in the 30s, have had a nice increase in the stock price. Number two, Pfizer has a lot of things going on, tons of announcements where they are either acquiring companies and bringing drugs under their umbrella, or they are getting FDA approvals and European EU approvals so that they can continue to market their drugs. And number three, Pfizer has been undervalued. In fact, it still is undervalued compared to its peers. At this current stock price, really, it's up at the top of those price to earnings, price to growth, price to book values. But it's important to know that at least one analyst has raised the price target now for Pfizer to $60 per share, so we still have some growth in there. I personally think that they're going to continue to earn a lot of money from their COVID vaccine. When this pill gets FDA approved, they're going to earn a whole lot of money from that oral pill. And I don't think that this is just short-term revenue. I think COVID is going to be around for a number of years, and Pfizer's going to make a lot of money from that. And with that whole bunch of money that they're generating, they're going to be able to continue to make acquisitions of other companies, bringing more drugs in-house. What's my plan for Pfizer? I plan to buy it on the dip. I certainly don't want to buy it when it's at 55, but I think it's still going to retreat back a little bit, back towards 50 and 49, and I'll hope to pick some up there. So that's my take on Pfizer. If this information was helpful for you, please give us a thumbs up. We'd love to have you as a subscriber. Please share this information with a young person in your life. Pfizer sounds like a great company for a young person to think about investing in. Make investing a family affair. And as always, enjoy your investing.